So Apple is up over 100% in just 130 days. And since December lows back in 2018, we are up over 200%. And on a $1 trillion market cap company, a company of this magnitude, that is just insane. Most recent earnings just shattering expectations with a 4-to-1 stock split coming up at the end of August. I get a lot of people asking me, should I be selling the Apple shares that I own? Should I be buying Apple? And that's what we're going to go over in this video. Before we begin, I just want to say that Apple is a phenomenal company. It is pretty much a staple in most portfolios, especially if you own something like the S&P 500 index, or if you just want a great blue chip company in your portfolio. The thing is, if you're going to hold this for more than 10 years, it doesn't matter when you're buying it. But if you're somebody who is looking to buy and hold for the next 1, 2, 3, 4, maybe 5 years, then this video is going to be for you, and it's going to be important to think about the things that we're going to talk about right now. A 200% move in 18 months is not only because, yes, they've been doing really well, even through the whole Rona situation, but most of all because this company has been undervalued for a very long time. Now see, Apple is not really growing at an insane rate like most of these other companies, but what they have done is actually switch their revenue source from more products to a service-based model. A couple of years ago, analysts were tearing this stock down because iPhone sales were decreasing and decreasing more and more year over year, and really with technology being at its peak for the time being, you don't need to upgrade a new iPhone every year. You don't need to buy a new MacBook every year. And this kind of ruined the old business plan of Apple. So what the company had to do was figure out how are they going to make up for those losses. And they did. What Apple was able to do was pivot the company essentially on a dime and make their business more based around services and wearables. I'm going to drop a video down below by Marques Brownlee. He does a really good job at explaining the ecosystem of Apple and really why it puts its claws in you. But essentially, think about it. If you have an iPhone and then you buy a MacBook and then you buy AirPods and then you get your Apple credit card and then you get Apple Watches, they really have done a great job at building an ecosystem that keeps you locked into the company. And now on top of that, they have added so many different services to the Apple ecosystem. Like I said before, the Apple credit card, Apple Arcade, as well as Apple TV. All of these service-based revenue streams is not only what's going to make the company grow and sustain the profits that it's had for the past 10 years, but it's also going to keep what customers they have within the ecosystem, hopefully for life. And this approach worked perfectly. I remember 2 years ago on the earnings call, that's what they were really pushing Tim Cook to do, was saying, how are you going to make the service industry work? And we've seen that it has literally gone exactly how they planned. And the wearables aspect is what has really seen a huge revenue incline, right? Look at the newer Apple Watches. They are a lot better than the originals. More people are wearing them. Look at the Apple AirPods. This changed the way that we communicate. Everybody has Apple AirPods now, right? You don't really see anybody walking around with the big Beats anymore. Everybody has Apple AirPods, or even a knockoff. You can get a Chinese version of Apple AirPods on Amazon for pretty cheap, or an Apple Watch, or even a Fitbit for pretty cheap. But it's not necessarily what these products do, it's how they work with the ecosystem that you have. It's that you can flip open the AirPods and automatically connect. It's that your watch syncs to everything on your phone and your computer, and the way that you can use these products together within your own ecosystem at your house or your office is what makes Apple superior, in a lot of other people's opinions, to other things like Microsoft and Google. As well with Apple TV and now Apple's streaming service, this is just widening the gap of the different revenue streams that the company had. Not to mention, look at Apple Arcade. Within the next 10 years, a lot more gaming is going to be done on your phone. I don't agree with it, but look at kids right now who are growing up playing games on their tablets and their smartphones instead of Xboxes and PlayStations. So we're going to see a huge demographic of people playing these in the future, and Apple is already on top of it. Not only are they making games, but they are hiring legitimate game developers to do this, and they're putting it all in for a monthly subscription instead of buying them game by game. The point is that they had a serious issue on their hands 2 years ago. And with a $1 trillion company like this, 2 years is not a long time to literally pivot the entire company and set themselves up for a bright future. And that not only shows you how strong of a company this is, but it shows you how strong the executive team is, how strong Tim Cook is as a leader to be able to do this in such a short amount of time. Now we're just going to do a quick financial rundown of Apple. So if we look at Apple as of right now, the price of the stock is $436.77. and the market cap is $1.9 trillion. The earnings per share is 13.16 and is trading at a pretty high PE ratio of 33.12. They do have a small annual dividend of basically 0.75% or $3.28 per share. It is trading at its high of a 52-week range. Well, if we take a look at the income statement, we can see year over year we have small growth. And this is why I said earlier, this company is not really growing at a fast rate, but what they're actually doing is transitioning how they generate their profits, which is huge, without declining profits year over year, which is really big. Net profits in the past couple of years has actually gone up on average, even though we did see a slight decrease from 2018 to 2019. As far as the balance sheet is considered, we do see that they have $338 billion in assets in 2019 and $248 billion worth of liabilities. Now, that doesn't really worry me too much because what liabilities Apple has is probably not that big of an interest rate, so it doesn't really make sense to go and pay down the debts as soon as possible right now. And even if they were to pay it all off, they'd still have almost $100 billion in assets just sitting on the balance sheet. As you can see, financially, Apple is a phenomenal company. Now this leads to the question of, if a second wave of Rona were to happen, how would Apple be impacted? Because a lot of people believe a second wave is going to happen, and that's something you have to think about as an investor. Now, during the first shutdown, we had factories that were closed, we had stores that were closed, and you can see with earnings in the past 2 quarters, that didn't really affect them that much. If this shutdown persists for the next 6 to 12 months, or God forbid actually gets worse, I don't see Apple being in that much trouble. Now, of course, this could definitely get in the way of the fall launch of the new iPhone, which people always look forward to, as well as the holiday shopping, which of course really has a big impact on revenue growth for Apple, but most of that can be done online. Like I said, you can order a lot of the products online, but also the service industry is all online. I don't see another shutdown really hurting Apple unless it's like a manufacturing shutdown for extended periods of time, because then they wouldn't actually be able to produce the products to sell them online. But as far as stores being shut down, that's not really going to affect too much of their sales. All in, I think Apple is a phenomenal investment. But this leads to the question, should I, or should you, or should anybody be selling their stock right now in Apple? And I'm not a financial advisor. I'm not going to tell you what to do. I'm just saying what I would do. And one thing you have to think about is that if you're holding this for less than 5 years, the price of the stock is going to be important, right? If I was buying for 1, 2, 3, 4, 5 years, I would hold off a bit for sure. I think that this is really exhausted with all the great numbers, all the great earnings. This is kind of like a hedge too against the Rona because it's not being impacted. People want to make more money. People want to put their money in stocks like Pelotons and Zooms and Amazons and Facebooks and Apples, where they're just going up and up and up during a pandemic. So of course that makes sense. That's why a lot of people are flooding to stocks like Apple. What you have to think is, how long is that going to last? For me, I think we could see Apple fall down to about $350. I have a price target of $330. Not that that's where I think it's going to be, but that's where I would personally be starting a position. Now, if I had a lot of shares, I'd be skimming some off the top. I personally would be selling at least 30, 40, potentially 50% of my position just to cap in some gains. And then I would be saving some of that money to average down if the price does fall in the future. So let me know what you guys think. Let me know if you think I'm an idiot. Let me know if you think I'm right. Let me know if you are buying, selling, or holding Apple stock, guys. Hit the like button, subscribe to this channel. I'm giving away 7 days for free in my private stock market academy below. And until next time, guys, I'll see you.